Ladies and gentlemen, today I would like to reflect with you on one of the most notable developments in the global financial markets in recent times, the powerful resurgence of Bitcoin and the awakening of the entire cryptocurrency industry. Over the past week, Bitcoin has seen a remarkable rally, surpassing the $95,000 mark, a milestone few dared to dream of just months ago. A 12.5% weekly gain has made it Bitcoin's best performance since mid-November last year. What's notable is that this surge isn't happening in isolation. Ether, the second largest cryptocurrency, also jumped over 13% in just a few days. Solana, another standout name, has also posted strong gains. What we are witnessing isn't merely numbers on a chart, but the beginning of a new cycle of trust, a repositioning of digital assets within the modern financial framework. This renewed confidence isn't limited to crypto holders, it's spreading into the stock market. Shares of companies like Coinbase and Robinhood have risen more than 18% in just a few days. Firms like Mara Holdings and Strategy also saw strong gains, around 13%, at times reaching 15%. From this, we observe something significant. When Bitcoin moves, it's not just the crypto market that reacts, even Wall Street must adjust. This isn't just a ripple in value, but a signal of a new financial model taking shape. One of the key turning points driving this momentum is the shift in attitude and policy from U.S. financial regulators. The Federal Reserve, long considered one of the most conservative institutions in financial policy, has withdrawn 2 guidance letters regarding how banks engage with crypto. Specifically, commercial banks no longer need to notify the Fed in advance about their crypto activities. This is not merely the removal of a regulatory barrier, it's a strong message that policy is becoming more flexible and innovation-friendly. The political landscape has also played a role. The return of a more crypto-friendly administration, especially regarding post-election policymaking, has significantly contributed to the current wave of optimism. When investors see a political commitment to blockchain technology, they become more willing to expand their portfolios, invest capital, and experiment with new financial models. A major signal of this shift is that publicly traded companies are beginning to actively accumulate Bitcoin. Fidelity has reported that the amount of Bitcoin held on exchanges has dropped to its lowest level since 2018, around 2.6 million BTC. This suggests that large players are moving Bitcoin into long-term storage wallets rather than keeping it on exchanges for short-term trading. Fidelity also noted that in just a few months following the 2024 presidential election, more than 350,000 BTC were purchased by public companies. That's an average of roughly 30,000 BTC acquired each month this year. This accumulation strategy is no coincidence. It reflects a strategic shift in perception. Bitcoin is no longer just a speculative gamble, but a legitimate part of corporate financial balance sheets. We've seen Strategy hold over 538,000 BTC. GameStop, a name synonymous with wild market swings, has also added Bitcoin to its corporate assets. Recently, a new company called 21, backed by financial and crypto giants, has amassed over 42,000 BTC with the aim of offering financial products focused solely on Bitcoin to investors. One particularly interesting aspect of this evolving financial structure is Bitcoin-backed margin lending, where investors use Bitcoin as collateral to borrow cash. You may ask, why not just sell Bitcoin if they need money? The answer is simple and logical. Selling would trigger capital gains taxes. By holding Bitcoin as collateral, they retain ownership of their BTC while accessing cash for spending or reinvestment. It's a smart financial strategy now being adopted by many professional investors. Traditional banks, once hesitant toward crypto, are now joining the game. While they aren't yet directly issuing loans backed by digital assets, they are investing in securitized lending portfolios related to Bitcoin. For instance, organizations like Arch Lending have received funding from traditional investment funds to support loans collateralized with Bitcoin. With more attractive returns than home or auto loans, this model is drawing attention from banks seeking higher yields as base interest rates flatten. Of course, every opportunity comes with risk. Bitcoin's value can fluctuate sharply in a short period. This creates challenges in maintaining collateral value, especially without timely margin calls. As a result, banks are proceeding with caution. Every investment in crypto-related financial products must pass through multiple layers of scrutiny: legal teams, risk management departments, and financial compliance boards. Law firms now play a crucial role in bridging the traditional finance world with the crypto realm. Lawyers don't just draft contracts. They assess the safety of technological platforms, ensure data resilience, manage counterparty risk, and build contingency plans for market volatility. They work closely with banks to identify scalable models and avoid hidden risks. And while the regulatory framework is still evolving, the U.S. Securities and Exchange Commission, SEC, is actively hosting policy dialogues with businesses, lawyers, and technology developers to find suitable solutions for the digital asset market. One of the central topics in these discussions is custody: how to ensure that investors feel secure about the protection and accessibility of their assets. When we look at the bigger picture, one thing becomes clear. Bitcoin is no longer a symbol of technological rebellion. It is steadily becoming an official part of the global financial system. This shift is evident not only in price movements, but also in institutional behavior, legislative attitudes, and a more transparent flow of capital from Wall Street. We've come a long way, from the early days when Bitcoin was a niche concept within the tech community, to today, when it's a multi-trillion-dollar asset class analyzed by major investment funds and listed on corporate balance sheets. And perhaps the most remarkable part is this: we're only just getting started. Ladies and gentlemen, the story of Bitcoin isn't just about technology. It's not just about investment. It's a story about trust, about how a society can create a new form of value storage and exchange that is independent, decentralized, yet increasingly accepted and integrated into the mainstream. We are witnessing a moment of transition, a phase where money isn't only issued by governments, but can also be encoded, verified by open source code, and stored on a decentralized blockchain. Whether you are a supporter or a skeptic, one thing is certain: the financial world is changing, and Bitcoin is leading the way. Thank you for listening. Would you like this edited into a speech format with stage direction or emphasis points for delivery?